Recently, the administration announced they were pulling the plug on a highly controversial $1.8 billion fund originally slated to compensate January 6th insurrectionists. Quietly backing away from such a partisan, headline-grabbing payout looked like a rare moment of administrative restraint, a calculated return to standard operating procedure. But buried in the fine print of that settlement was a provision that remained untouched, a clause granting Donald Trump, his family, and his businesses total immunity from all current and pending IRS audits. They traded a public payout for their supporters to secure an airtight tax shield for their own private wealth. This abandonment was a tactical pivot, ensuring the power of the highest office remains focused on its primary function, acting as a wealth protection apparatus for the family. The man who signed the document providing these audit protections is Acting Attorney General Todd Blanche. Blanche is currently running the entire Department of Justice, despite the fact that he was, until very recently, Donald Trump's personal defense lawyer. This legal force field is a response to escalating jeopardy. A New York jury has already found the Trump Organization guilty of 17 counts of criminal tax fraud. Pressure is mounting from a separate civil fraud case, where the family is now expected to repay more than $354 million. The most immediate threat involves the IRS, where ongoing audits are reported to carry a potential liability of an additional $100 million for the family. This ledger shows how the DOJ order functions as an eraser. It targets that specific 9-figure debt and ensures the red disappears before it ever reaches federal oversight. The Department of Justice is no longer an investigative body in this context. It has been captured to serve as a defensive shield, saving the family from a massive financial hit. While the DOJ erases liabilities, the administration is using other federal agencies to actively generate revenue. The Pentagon recently moved to award up to $700 million in loans and contracts to a rare earths firm called Vulcan Elements. The request for these funds was pushed through by Peter Navarro, the senior counselor for trade and a close presidential ally. Vulcan Elements has a direct link to the inner circle. A venture capital firm with a stake in the company is tied directly to Donald Trump Jr. In this pipeline, taxpayer-backed contracts act as a propellant. As Vulcan's valuation climbs, by as much as tenfold, the private state climbs with it. This wealth, generated through regulatory capture, enriches the linked firm without the family engaging in traditional business development. By treating the Pentagon as a revenue engine, political allies have weaponized federal contracts to create a guaranteed windfall for the family's private interests. When these defensive shields and offensive contracts are viewed together, the boundary between the federal budget and the family's balance sheet effectively vanishes. Every erased debt and every inflated contract is subsidized by the American taxpayer. While these maneuvers secure elite wealth, the average citizen is left to navigate high gas prices, unaffordable housing, and the weight of healthcare debt. The administration's willingness to let infrastructure crumble or cut social safety nets reveals a stark hypocrisy. The public interest is negotiable, but the private portfolio is protected at all costs. This is what happens when institutional guardrails are replaced by personal fixers. Oversight fails the moment the people in charge of the agencies are the same people who benefit from their silence. When government functions like a family business, the Treasury becomes a private fund, and the public is left to settle the final bill.